You're watching the Daily Market Comment for Monday, December 20th by Mario Sachikiriakos. I'm Cristina Marujos and thank you for joining us at xm.com. Global markets are taking fire from multiple directions as the new week gets underway. With Omicron spreading like wildfire through Europe, countries like the Netherlands have gone back into full lockdown, while Germany and the United Kingdom are considering new measures which could hamper economic growth. However, the twist is that policymakers can't ride to the rescue this time. Central banks have their hands tied by roaring inflation, while most governments have lost the appetite for enormous spending packages now that debt levels have ballooned. President Biden's $2 trillion economic agenda is dead in the water after Senator Manchin said he won't support it after all, while senior Fed officials are openly warning that interest rates could be raised by March if needed. Volatility episodes could become a more frequent theme next year as some liquidity is withdrawn and markets learn to drive without support wheels. Risk aversion is the name of the game on Monday. Stock markets across the world are submerged in a sea of red, while crude oil prices and riskier currencies have suffered serious injuries. Thin liquidity conditions are likely amplifying these moves as many big players have closed their books for the year already, leaving the market emptier and hence more vulnerable to sharp swings. Many charts are now flirting with crucial support levels. The S&P 500 is approaching its 100-day moving average, a barrier that has acted like a trampoline for the index in the past. Meanwhile, cable has erased all the gains it posted after the Bank of England raised rates and is now threatening a breakout. The US dollar and the Japanese yen have been the biggest beneficiaries of the flight to safety, which has also spilled over into the bond market as traders load up on protective hedges. Elsewhere, the Turkish Lira has been smashed to smithereens after President Erdogan repeated that markets shouldn't expect anything other than rate cuts from the central bank. The pace of depreciation in the Lira is truly staggering, with the currency losing more than 40% of its value against the US dollar over the last 2 months alone. It seems like a matter of time until either capital controls are imposed or currency depreciation feeds into political instability. This was the Daily Market Comment at xm.com. Have a great week.